Hello again, and thank you for watching. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is Tuesday, November 9th of 2021, and we're going to talk about three topics that we're paying attention to as markets are paying attention to, so you should be too. So let's get right to it, and thanks for watching. So let's look at markets today. Midday, they pulled back and reversed course from higher highs. In fact, the S&P, as an example, if we look at it, has had one of the longest winning streaks since 1997. This year, the S&P right now is up about 25% year to date, and that's tremendous given all of the sort of everything you could throw at the market. And the reason why markets are up is because of earnings, and we always pay attention to earnings because that's how equity markets are priced essentially. And what happened is the third quarter right now is better than expected on majority with raising guidance. Now, what's going to eat into that are the two things. One is the carrying cost, right? So the inflationary numbers that we have that companies have to deal with higher wages, wage inflation. It's going to be concern on a go-forward basis for the next years to come, if you will. And then also we have yields, right? So we also have the 10-year Treasury right now backing off a little bit. But what's interesting is even though the 10-year is now under 1.5% after its high back in October and sort of its run from August to October, and so now we have the 10-year Treasury now settling into a range, but it's backing off on the short end of the curve, the 2-year and the 10-year. But also the 30 years coming down too. So interest rates are coming down in the face of higher inflation. What we do know is in the future, the Federal Reserve has also said that they're willing to, at the end of next year, so this time next year, begin the interest rates rise, if you will, sort of increasing interest rates. But all that could change as markets are indicating that we may get a bounce that we're seeing right now, but it's a wait and see environment specifically for bonds on a go forward basis. And again, everything's interconnected from the fixed income market of the 10-year Treasury to everything that you see as well as earnings and all of the inflation that's built in. So we're going to continue to pay attention to all these three factors. And what's interestingly of all is that this surge in inflation is leaving the world leading economies with their lowest real rates in decades. And so a lot of economic forecasters out there are saying that's going to be the biggest challenge. Again, like I said before, as it relates to inflation, the inflation COLA adjustment, cost of living adjustment for just Social Security. And Social Security benefactors are about 70 million Americans right now on Social Security. So in 2021, it was announced that if you're receiving Social Security, you got a 1.3% bump. And then for 2022, it's a 5.9% increase, which is the largest in decades, if you will. That being said, that's not something that you can take back, right? That is wage inflation. That is inflation that is around, and that's not temporary or transitory, as the Federal Reserve has said. That's real. So when you give an increase in Social Security, that sticks. It doesn't go down. So we know it's in everywhere we go. We see skimflation, stagflation. Those are all words that we're seeing, but we're all feeling it personally, especially at the pump. And now markets are saying potentially if we see an inversion, meaning the short end stays higher than the long end on the 30-year, that's what we're paying attention to. That's called an inverted yield curve, and that indicates a recession. And now we're not there yet, but this is why we want to pay attention to interest rates on this point in time, because we're going to see what the 10-year Treasury and the 30-year Treasury tell us on a go-forward basis. But as of right now, earnings are strong. Markets are just taking a pause in the S&P, and rates are coming down, which also help earnings on a go-forward basis. But that's our update for today. Thanks for watching, and we'll see you again later this week. Thanks. Take care.